Good Monday morning from the Asia-Pacific, just half an hour away from the opening bell, Hong Kong, Shanghai, and Shenzhen. You're watching the China Show. I'm David Ingles with Yvonne, man.
Our top stories this morning, Asian stocks seeing early gains as signs of easing U.S. inflation boosts Fed rate cut bets. Oil falling after OPEC Plus sets a date to bring some barrels back online.
Now, conflicting visions on regional security at Singapore's Shangri-La Dialogue, with China blaming outside forces for destabilization and the U.S. touting expanding military partnerships.
And I'm Helena. I'm in New Delhi. Indian markets set for a boost with exit polls tipping a landslide election victory for Prime Minister Narendra Modi.
All right, happy Monday to you. It looks like we are seeing a pretty positive day when it comes to these risk assets here. So you got to thank that U.S. PCE inflation report on Friday, which certainly did show signs of cooling and the slowest print we've seen this year. That certainly is helping to continue on with this rally that we're seeing across Treasuries. So yields are still ticking lower, at least stabilizing in the U.S. session. But you are seeing that follow through into some of these sovereign bonds in Australia, even in Japan slightly here. We're watching very closely what's been going on with, of course, dollar yen. We're back to 157 levels here right now, but we finally got that confirmation, right? That last month they did, in fact, intervene. It was quite a big price tag, $62 billion to prop up the currency, and yet we're still back at 157 levels. And, you know, that number also exceeded what they actually used to defend the currency all of 2022, mind you. So the size of it was quite telling, although was expected from us, most that were watching this very closely. We're also watching those crude markets, as we just talked about, with OPEC Plus meeting. Yes, they did decide to extend those production cuts, but maybe only until the third quarter is what they're saying now. And they're setting up about a 12-month plan afterwards to start unwinding those output cuts. So market participants are saying that's bearish for oil in the longer term. They were expecting at least those cuts to extend throughout this year. Brent markets are doing slightly better, but we're watching Shanghai crude. It's kind of reflecting the drop that we've seen in the past day or two or so. We're down about 1.5% in Shanghai. Flip the boards, we're taking a look at equity markets. Are still doing quite well. Of course, we're watching India very closely, right? So it looks like these exit polls are signaling a pretty good victory for the Prime Minister Narendra Modi there. So policy continuity certainly is what markets like, and you're seeing that optimism reflected in some of these ETFs in Korea as well as in Japan today. We'll see how those Hong Kong traded ones play in just a few minutes' time. Here's a setup for the China Open. The big thing we're going to watch, of course, is we did enter into technical correction when it comes to the tech gauge on Friday. It was probably like a late day selling that we saw into those Chinese tech stocks. The Caixin PMI numbers are going to be quite telling, right? If we see a contraction similar to what we saw in the official numbers on Friday, Dave, does that not bode well for the sustainability of this rally?
Yeah, in fact, just to mention that too, right, since you bring it up, the Caixin numbers tend to be slightly higher always, well, most times than the official PMIs. If that also, to your point, enters a correction, and I think the one on Friday missed just about every single forecast from economists. Well, we'll see what it comes out in, of course, in about 40 minutes or so. Just another note to while we're talking about India. So we're looking at, as Yvonne is pointing out, 2% pop in futures there. That should put us, and we'll see, that should put us a record in sight at the open in India a bit later on in the show. Right, now back to China right now. So we are on it depends which index you're looking at here, 2 weeks of losses, Hang Seng Index and the CSI 300. Shanghai Comp is on a 3-week skid. We're coming off a softer, and that's relatively speaking, softer dollar on Friday. Following, of course, the core PCE numbers coming through as well, so we'll see what the fix looks like today. Just in terms of sectors to watch here, you have tech because of what's happening, of course, across broadly. You look at Korea, you look at Japan today. Tencent was also denied this report out of the Nikkei that China was asking the company to lower its market share requirements in the payments market. So we'll see any reaction there. And also some of these auto stocks on the back of some numbers coming through in terms of monthly sales numbers coming out. So it's going to be busy, and I promise you we will be getting to all these things in just a moment.
Yep, and obviously we're tracking what's been going on over the weekend as well. These conflicting security strategies from the U.S. and China in the Asia-Pacific were in focus at the Shangri-La Dialogue in Singapore over the weekend. You had the U.S. Defense Chief Lloyd Austin touting Washington's expanding military partnerships across the region, which he says reflect free choices of sovereign states. But Chinese officials pushed back, blasting U.S. support for Taiwan and warning against the development of an Asian NATO.
Safeguarding the security and prosperity of this region remains the core organizing principle of U.S. national security policy. The United States can be secure only if Asia is secure. And that's why the United States has long maintained our presence in this region. And that's why we continue to make investments necessary to meet our commitments to our allies and partners.
We will not allow anyone to bring geopolitical conflicts or any war, whether hot or cold, to our region. We will not allow any country or any force to create conflict and chaos in our region.
Now, trade is present tense also at the center of tensions between the two, of course, U.S. and China. And economist Stephen Roach says Washington risks entering into a forever war against Chinese trade practices. Roach says that the Biden White House and the protectionist stance there against China could be a blunder, possibly of historic proportions. He says China has an advantage in producing non-carbon alternative energy products, and certainly comes as the world grapples and is trying to combat, of course, climate change. Washington has high tariffs on some Chinese products in a bid to protect its domestic sector.
That was the column into the SCMP, and we have himself, Stephen Roach, joining us now here in Hong Kong. Along with us is our Chief North Asia Correspondent, Stephen Ingles. Stephen Roach, it's great to have you back here in the region. Certainly, we'll talk a little bit more about Hong Kong a little bit, but I want to get to your latest column about how you think U.S. trade policy is incoherent. What do you think is wrong about it right now?
Well, I don't think we know what we're trying to accomplish with trade policy. Are we trying to reduce the trade deficit? Are we trying to stop Chinese technology? Are we trying to protect U.S. industries in green technology products who do not have a comparative advantage, who do not have the scale? Are we trying to contain China geostrategically? What are we trying to do? I mean, we're multiple goals with one instrument, and I would say, and I've written books about this, that we have a huge trade problem. We have deficits with over 105 countries. We're going after the biggest one, but, that leaves, 100-plus countries that still have significant imbalances with the United States. And as we squeeze the Chinese piece, that portion of our deficit goes to them, and they're higher-cost producers, and that taxes American consumers. So what are we doing with trade policy? Do we actually have a clue, a strategy as to what we're trying to accomplish?
Politicians, they see the word trade deficit, and they start running, and they start trying to put a positive spin. As an economist, do you think having a trade deficit is a bad thing?
For politicians most of whom have never taken an economics class, trade deficits are bad. But the point that I have made to our friendly politicians in Washington is that the trade deficit really is on their backs by running massive budget deficits. Right. The United States is suppressing domestic saving, forcing us to import surplus savings from abroad, and running massive trade deficits to attract the capital. So you want to fix the trade deficit, Mr. Politician, look in the mirror and fix the budget deficit in the United States.
Stephen, while we're talking the intersection of politics and business, obviously, let me take the devil's advocate on your claim about essentially a forever war. The Biden administration, they tell me essentially, in economics and in trade, the Biden administration officials that I've spoken to say, listen, it's only a small proportion of products that are being tariffed right now of the overall two-way trade between China and the United States. EVs, even at 25%, they were there was no access to EVs, Chinese EVs in the United States. Syringes and surgical gloves, the Chinese have the scale already to outcompete any product that the United States might make. And that's not going to necessarily spur domestic industry. And so it goes back to the question is this just for political show? Because Donald Trump and the Republicans are talking 60% across the board on all Chinese tariffs, products.
Well, there's no mistaking, Steve, the political motives here is, we're certainly moving into the most intense part of our rather insane political season. But the new tariffs that were just announced a couple of weeks ago cover $18 billion of items. But how about the old tariffs that are still in place, that were put in place by President Trump 2018 to 2019, that cover something like $350 billion of imports from China? They are still in place. So we're throwing bad money after bad money, and the level of tariffs, I think the latest number is roughly 20% tariffs on all Chinese products versus pre-trade war of a number closer to 3. So, I take no comfort from the fact that these latest tariffs on Chinese imports are small. The overall volume of tariffed imports is high and likely to rise further.
What about what the U.S. says about overcapacity? I mean, are those claims, you think, overdone? I mean, the Chinese obviously have been subsidizing and supporting the production of clean tech and the like.
They're totally overdone. I mean, first of all, and I think you reported on this when you mentioned my comments in Beijing on Friday, when it comes to green technology goods, in today's world that is getting hugely challenged by climate change, there is no such thing as excess capacity. We need all the capacity we can get to move away from carbon to alternatives. Shame on us if we don't have the capacity to make those goods at home. But in the meantime, let's take advantage of somebody who has the technology, who has the scale, who has the product, who can help make global climate, certainly won't end climate change, but help make global climate more tolerable in the meantime.
Right. What do you think the fix should be, though? Yeah. So what should a U.S. president, that's party agnostic question, what should a U.S. president do to either manage or spin the deficit problem, whether that's trade or budget?
Look, far be it for me to have a solution to a problem that has spanned both parties over decades. I mean, I've looked at the budget numbers, since, I think, 1962, according to the Congressional Budget Office. We've been in deficit every year except 2. So there's no easy fix. It's politically expedient for politicians to keep pumping more money into their constituencies, and they never lose by doing it. They never lose their position in office, so they're not going to stop, and they are unaware or unwilling to accept the consequences for their irresponsible fiscal policy. And trade is one of them, a big one.
Stephen, you just came back from Beijing. What's the mood on the street that you got from them? I mean, you've taught lessons at Yale University about the property crisis in Japan that lasted nearly 2 decades. You see parallels there, and just at the beginning. But there's also some despair, I would assume, among small to medium-sized enterprises and young people. What did you find?
I found a Beijing that really didn't have much of the spark that I had been accustomed to over my many years of traveling there, Steve, especially, as you said, amongst private sector entrepreneurs and students, not just undergraduate students, but graduate students completing PhDs in leading Chinese universities with not much hope for job prospects post-PhD. I think the mood was one, certainly the best I could call it was a mood of grim resignation and you could go further, but I don't care to really do that.
Fixable? Either so cyclical, or is there a structural component here that, and if it's structural, do you think they have the toolkit to manage that structural shift?
It's a big structural issue. And what my work shows, and actually what President Xi has elliptically said recently, is that because the population is declining, the workforce is declining, China needs to boost productivity, even cited a term I'm sure he knows nothing about, total factor productivity, as a potential offset. And China's new approach to focusing on new productive forces is aimed at doing that. And there are consequences of that for the rest of the world that we're pushing back on, which is unfortunate. China needs a lot of help in grappling with its structural issues, and it would be not only in China's best interest, but for the rest of this region as well as the world, for them to succeed.
And you're seeing that Hong Kong might be feeling those effects in some ways. I mean, it's been a few months since you wrote that controversial column that Hong Kong may be over. Just wondering, what are you looking for in this trip, being in Hong Kong?
Well, I'm looking for some interesting discussions from my good friends, number one, to see if they're still friends, and number two, to hear their side of the story. They have pushed back on me a lot, saying Hong Kong is historically the most resilient economy in the world, and you're missing that. And Yvonne, you said, well, China's connection may cause problems. It's not that it may cause problems, it will cause problems. The linkage between Chinese economic growth and Hong Kong economic growth has a precision that would stagger you. I've done the math, I can cite the numbers, but when China underperforms, there is no way that Hong Kong can overperform.
So is this more about Hong Kong being a part of the Greater Bay Area, maybe as what China's envisioned, or is it, is Hong Kong still able to maintain that international status?
That's the question. I'm looking forward to debating that. I think Hong Kong still has an important role to play as an international financial center, but it's getting certainly swallowed up by the mainland. It's part of the Greater Bay Area. It is not the crown jewel of the Greater Bay Area, as the press release would lead you to believe. I am delighted to be back here, but I think Hong Kong faces challenges of historic proportion for this city.
All right, Stephen, Roach, thank you so much. It's nice to see you. Have a great week ahead. Hopefully it's eventful, positive, constructive conversation. Stephen Roach, your senior fellow at Yale School, and also former Morgan Stanley Asia chairman, also the author, the book I have it here in my hands here, Accidental Conflict, America, China, and the Clash of False Narratives. Right, there we go. Just going into the Monday Open here, 12 minutes away. Futures should be pointing to the upside here, so we'll see what happens at the Open. Shanghai, Shenzhen, and what looks to be a fairly gloomy Hong Kong Monday morning. There we go. Plenty more ahead. This is Bloomberg. You're watching The China Show.
All right, let's get back to the elections in India, as exit polls indicate a resounding victory for Prime Minister Narendra Modi's party and its allies. You look at those nifty futures now popping close to 3% at the early get-go. Our Bloomberg Markets Asia anchor Helena joins us live in New Delhi for more. It seems like it's ever closer to another win for Modi. What's the latest now, Has?
Well, Yvonne, you talk about the markets. We've seen a lot of volatility in recent weeks in Indian markets amid murmurings of perhaps Modi fatigue or a lack of a Modi wave. But if you take a look at the exit polls that came out after elections ended on Saturday, well, they're suggesting perhaps a landslide victory. Some of these exit polls suggesting that perhaps he'll win 350 seats out of the 543 up for grabs. That is a landslide victory. victory nonetheless. But remember, a Modi win was never in question. The real question is whether or not Modi will secure the landslide supermajority that he is after leading up to the elections. He talked about wanting 400 seats that would allow him to perhaps implement controversial policies, land policies, labor policies. Well, that remains to be seen. He posted on X saying he is confident that he'll get the numbers he wants. It'll be record numbers, record seats, but we'll find out only tomorrow when counting begins from 8 a.m. local time. Remember, for him to get to 400, he needs to win the hearts and minds of the southern states, which have traditionally voted for the opposition.
Yeah, as you outlined there, 400 is that sort of the next key milestone, if you will. Let's say we do get 400. What's next on the agenda for investors there now that they, of course, have that mandate to push some of these reforms, further reforms forward?
It is about getting those mandates. I mean, the land reforms and labor reforms that we're talking about are controversial. He needs 400. He needs a supermajority to push through those reforms. Dave, we talk about how India is an 8% economy. This is the fastest growing major economy in the world, but that is not enough. India needs 9% growth, 10% growth to lift more people out of poverty. Remember, Modi himself has said he's lifted 250 million people in India out of poverty, but 900 million of the population still live below the poverty line. He needs to do more. And talk about, you know, an economy that's reliant on manufacturing, on infrastructure, investment. He needs to do more as well. He needs to look at the services sector, for instance. So these are the things he needs to look at, and he can look at these policies and reforms if he gets a supermajority.
Haslinda Amin there in New Delhi for us, our Bloomberg Markets Asia anchor, and looking at futures right now, we probably might just open at a record high there in India. Right, just going into the open here in Greater China here, just what, 6 minutes away. Futures are pointing up. The Hang Seng Index in the early goings there, we go up 1.1%, and we're coming off a 2-week skid. A preview of the trading day just ahead. This is Bloomberg. Happy Monday. Right, welcome back to show's Tencent in focus today after the company denied this earlier report out of the Nikkei that it was asked to shrink its market share requirement. More on that in a moment. Casino stocks data was out, and we'll be joined later on shows by the director of the Macao Government Tourism Office.
Yeah, I mean, gaming revenue jumped nearly 30% in May. You got to think, of course, that Golden Week holiday. So you're seeing most of these casino operators are up. Property is also up here this morning. New home sales slump easing in May. We'll talk more about that coming up. Welcome back. You're watching the China Show. We're kind of on the open of markets, and this Monday morning we are seeing a decent rally take place here on the Hang Seng. We're seeing gains of about 1%. It's really been driven by this whole tech play. Property is also doing quite well here as well. We talk about that Tencent report. Also, when it comes to that PCE inflation gauge in the U.S., really did add a bit of a relief rally across the tech sector overall. So we're seeing that sort of follow through here. We got China PMI Caixin numbers coming out in a few minutes' time.
Yeah, the range of forecasts will be key. Certainly the low end will be very much in focus following that massive miss that we had on the official numbers, of course, on Friday, which you guys, of course, talked about there. We're going into the open today, and we're coming off 2 weeks of losses, particularly in the Hong Kong markets. We're really, and Yvonne is pointing out this correction that we have entered in on the tech gauge as well. There's one key support level to watch. We'll show you that level in just a moment here. The open onshore in China, flat, CSI 300, 35,677 right now. So we're looking ahead, obviously, to the PMI numbers coming through as well. Will that effectively also mirror what we're seeing in the official numbers? And certainly one thing I'd note there is that it's a different sample size, more private companies, more smaller companies, more export-oriented industries there as well. So you could get maybe somewhat of a gauge there. Maybe something similar would be the small gauge PMI that we got on Friday on the PMI numbers, official ones, which actually showed a further deterioration across the smaller companies, although the larger companies are doing much better. The bigger, heavily weighted ones on your screens as well. Obviously, we're looking at what's happening with yields following what probably was the most pronounced pushback on this rally on Friday as well. You now have a range 2.5% to 3%. That's probably our playground for now. The open in Hong Kong, have a look at this. Tencent was in focus. Alibaba too, on the back of this move up in tech. There we go, 2.5% on Tencent. So two things on Tencent. One is bottom of your screens. The company acquiring 10% of the Thai music firm, which is valued at about $700 million US. So that puts it about a 17 million question mark injection there as well. And also this denial from the company that it was being asked to lower its payment market share. So we're up 2.5% there. Baba's also up by a similar amount. Also listed in Hong Kong are some of these ETFs that trade here, of course, that mirror what we're seeing across this sort of Indian narrative on these on the elections coming through. You have obviously this contact trading this hour, 2.5% up there. So we are seeing some of these ETFs that are trading here in Hong Kong also moving higher. Okay, as promised, some data coming through. Right, so auto sales data, you had a lot of these numbers. NIO came out with theirs, effectively month-on-month jumps compared to the previous month there. Xiaomi came out with something interesting too. I think it's 15,764, if I remember correctly, on that new SUV. I think they're looking at 160,000, I believe, in terms of the guidance coming through as well. In any case, we are seeing gains across these stocks. Great Wall Motor, there's report out of the Nikkei that it was shutting its office in Europe and laying off all of its staff. More on that later on in the show. Shares are up about 2% there. Very quickly, as promised, HS Tech entered a correction on Friday, blew through the 200-day moving average. We're now looking at your 50-day as perhaps your next line in descent. We're going to get that up. There we go on your screens. That's this purple line. And we are opening with a slight, nice allowance there, just over that key level to watch. Let's throw this forward. Where do we go from here after we did enter, Yvonne, that correction on Friday?
Yeah, let's bring that question to our Bloomberg Asia equities reporter, Charlotte. Yeah, her team, of course, not just watching the tech space, but everything, all things China equities. What are you watching out for today?
Yeah, so I think today where the sentiment is boosted by a slew of pretty positive reports, starting with Tencent. They denied that request to lower the WeChat mobile market share. And also we have the Macao casino data that was really positive, which showed that casino sales has been in the highest level post-COVID. And also we're seeing EV stocks edging higher today with BYD, Xiaomi. BYD, it's actually, the monthly sales for May is actually not that far away from their peak sales in December, boosted mainly by the price cuts in the honor lists. And also we have the China home sales data. I think that depends on which you take on. Some analysts are saying that it's better because the easing weakness is better than expected, which is showing some, recent measures have been helpful to boost those sales. But for the broader market, the HSCI as well as Hang Seng Index, they're still not that far away from a correction from the May high. So I think that shows the month of June will be very important because that's before the big meeting of the third planet meeting coming up in July. So it will matter if they find more catalysts to help this rally sustain.
All right, Charlotte, thank you so much for just getting us warmed up today. Charlotte Yang, our Asia equities reporter. Now we're more on this tech story as well.
Oh, yeah. I mean, what a weekend in Taiwan.
What weekend?
We've been following everything that goes on with Nvidia CEO Jensen Huang announcing plans to launch a next-generation platform for its chips in 2026. And Huang sees generative AI playing a major role in the future of PCs.
Your future laptop, your future PC will become an AI. It'll be constantly helping you, assisting you in the background. The PC will also run applications that are enhanced by AI. And your PC will also host applications with digital humans that are AIs.
Let's get more on that keynote and bring in our tech reporter, Belle, here with us in our studios here. So translate some of these things into simple English for us. What did he present there?
Well, it actually went on for nearly 2 hours, so it's a pretty long presentation, and we know that Jensen Huang has been in that venue before. Last year, if you were to think about the focus, it was really on the hardware capabilities. So we had, for instance, the H1 processor, or the H100 processor was being talked about. There were different server rack modules, so proprietary technologies. It was really about bringing multiple components together to work like one unified computer. If you think about the difference this year, perhaps As I said, it was quite a long presentation, but around half of it really was focused on the sort of applications or tools that we're going to have as a result of this, because Nvidia just isn't about hardware. It's really pushing itself as sort of a full stack solution here. So there were things like different weather capabilities that are going to be able to be born out of the technology that it has, where you can really forecast down to the meter. There were things like virtual assistants or virtual medical personnel that can work alongside a human person as well to deliver sort of post-operative or post-visit care at home, things like interior designers, lots of different things. So that was part of the focus. Yep. And then the other focus as well was a bit of an update, because just a few months ago we got the new Blackwell processor that was unveiled, and that is a hugely powerful computer that can run the biggest large language models. And we got an update to that. So there's going to be a Blackwell Ultra chip coming in 2025, and there's an upcoming Rubin AI platform as well, and that's going to use the high bandwidth HBM4 chip, which is the next iteration essentially of HBM memory. That's been really a key sticking point for sort of accelerated production.
Obviously, there's a lot of, we talk about the benefits, this whole revolution that Jensen Huang talks about with AI. There was also a big focus on energy efficiency, also when it comes to cost savings. What do we hear about that? Yeah, well, this is something that's becoming perhaps a really big talking point. And actually last week when I was at that conference in Singapore, this was the panel that I moderated on, was AI and the environmental needs that go around that. And there's a really interesting statistic that was reported recently by the World Bank, and they said that the computing power that is required for AI tools is doubling every roughly 100 days. So every 100 days you need double the amount of computing power. That is huge amounts of energy needs that are totally constraining national energy grids. And so Jensen Huang as well made that a really big focus of his keynote address, saying that these processes now, they are becoming so fast and so much more energy efficient that essentially the more you buy, the more you save. That was what he called CEO math, but it was something that was really discussed during the presentation. The more you buy, the more you save, but really that big focus on energy efficiency and trying to bring down those energy needs. Yeah, CEO math. I love how he turned it.
Sounds like my wife,
Joe is our tech reporter. Watching what's been going on in Computex. And yeah, we got plenty more coming through from that conference in Taiwan as well. We're expected to hear from the AMD CEO Lisa Su. She's expected to head on stage there in just a few moments. Of course, they are still the next one to watch also in this whole AI play.
Yeah, there we go. Okay, let's get to some of your other big corporate stories that we're tracking at this point in time. Okay, Cathay Pacific, here we go. Speaking of, and we'll get to the Macau story in a moment here. So in terms of flight capacity, we're back to 80%. That's for June here. So, and it is on track for a full recovery by early next year. CEO Ronald Lam says the summer booking period for Cathay looks very healthy from both a passenger and also cargo perspective. He says ticket prices are gradually normalizing, hopefully that's down, with supply and demand getting back into sync.
Well, Hong Kong securities regulator says 11 cryptocurrency exchanges are a step closer to obtaining licenses. The SFC website says applicants, including Crypto.com and Bullish, are deemed to be licensed. Now, the move comes a year after the city rolled out a digital asset rulebook trying to foster a hub for the industry. Fashion company Shein is reportedly preparing to file a prospectus for approval ahead of its potential London listing. We're told the confidential filing could happen as soon as the coming week or later on this month. The timing of the filing does not necessarily indicate when an IPO would happen. Saudi Aramco's $12 billion share offering sold out shortly after the deal opened on Sunday, and Bloomberg sources say the order book reflected a mix of local and foreign investors. They're buying in for a piece of the company's $124 billion in annual dividends. Bloomberg Intelligence estimates that would give the stock a dividend yield of more than 6%.
Right, we are going into the session today with slightly weaker in oil, but although from the cutoff, as you can see, we're slightly higher from that, although compared to late last week, certainly softer just about across the futures curve. OPEC Plus, the news here, has extended these supply cuts through the third quarter, but also laid out a timeline for unwinding them over the next 12 months or so. Our Bloomberg Horizons Middle East and Africa anchor, Jomana Bersetchi, has more from Riyadh.
The part virtual and part in-person OPEC Plus meeting has just ended. Now, the main takeaway is that the group production cuts are going to continue until the end of 2025. That caps daily production at 39 million barrels per day. But we also got color on those voluntary cuts. Now, these were cuts introduced in November 2023, taking 2.2 million barrels per day off the market, and were introduced by 8 countries, including Russia and the UAE, all of whom were represented in Riyadh. Now, we found out that those voluntary cuts are going to be extended by another 3 months until at the end of September of 2024, after which they will be gradually phased down over the course of the next 12 months, ending in September 2025, subject to market conditions. Now, one of the surprise announcements was the fact that the UAE have now been given an extra production boost of up to 300,000 barrels per day in 2025. And of course, the UAE had been pushing for extra production capacity over the last couple of months. Now, clearly, this shows that OPEC are still trying to provide some support to the market, but at the same time, looking to appease some of the countries who had been pushing for higher production, not just the UAE here, but many of the other countries in the alliance as well. And as far as the market takeaway from all of this, well, on one hand, people are welcoming the visibility and the outline of what the production barrels are going to look like over the foreseeable future. But on the other hand, there are questions about how much supply is coming back to the market and whether the demand over the next 12 months can actually match up versus that supply growth. For Bloomberg in Riyadh, I'm Jumana Bersachi.
All right, that's the latest from OPEC Plus. We're also watching when it comes to these autos as well, particularly the Chinese EV sector. We just got that CCTV line that was interesting, right? Talking about China allocating 6.4 billion renminbi for vehicle trade-in subsidies. That's according to CCTV. We also got some of these delivery numbers for some of these automakers. Relatively speaking, everything looked pretty good for the month. So that's why you're seeing the likes of NIO up 3.5%. Same goes to Great Wall Motor as well. Macao casinos, there you go. Also, what's been driving this rally here today. You take a look at what we saw in the gaming revenue in May, and we basically saw the highest level since COVID, right? So we jumped nearly 30%. There was the Golden Week holiday effect, also new travel permits for Chinese tourists as well that actually helped fuel spending.
Yeah, and we'll get more on this story in the next hour of the China Show with somebody who might just know what's going on here. There we go. The director of the Macau Government Tourism Office joins us at about this time in the next hour. So stay tuned for that interview, plus plenty more ahead here on the China Show.
Australia's Defence Minister Richard Marles says security anxieties still remain in the country's relationship with China. Speaking to us at the Shangri-La Dialogue in Singapore, he also called on Beijing to uphold the global rules-based order.
We have sought to stabilise our relationship with China. And again, if you take a step back and look at what's happened in the last 2 years, big steps have been taken forward. You know, we went for a period of a number of years where there was no ministerial contact between Australia and China. That changed 2 years ago when I had my meeting with my Chinese counterpart, which was the first meeting at a ministerial level between our two countries in 3 years. Now, in the 2 years since that meeting, we've had numerous meetings between ministers of both our governments. There is significant dialogue across the whole range of our bilateral relationship, and we have seen a lot of the trade restored. We've seen a stabilisation of the relationship. Now, you know, there are tensions, there are security tensions that we have, there are security anxieties that we have. We obviously want to work through all of those, but there's no point in denying the fact that they exist, which is why we talk about cooperating with China where we can, disagreeing where we must. And we have been very clear about our disagreements when they occur. And one of the really important things is that when our militaries interact, they need to do so in a manner which is both professional and safe.
This is a more aggressive China. We're seeing that in the South China Sea. It's also a China that wants to expand its presence in the Pacific. Surely you must be quite worried about that.
Well, firstly, we make really clear that the rules-based order, I know people talk about that phrase a lot, and maybe at times people can think it's almost becomes glib, but the rules-based order has been profoundly important for the maintenance of peace and security in the East Asian time zone, in Southeast Asia and Northeast Asia, and it's been upon that bedrock that we've seen such enormous economic advancement of this region, very much to the betterment of China, to the betterment of Australia. And that's what we want to see continue. But what underpins that is that rules-based order. We need to know that we can operate in the global commons according to a set of rules which everyone consistently understands, which have been in place for decades. We call on China, but we call on every nation to engage in that way and to maintain that rules-based order. Now, when we have our Navy operating in the South China Sea and the East China Sea, all we're doing is asserting that rules-based order. We're operating in accordance with international law, and we understand that in that process we'll interact with other militaries, particularly the Chinese Navy. But those interactions must be professional, they must be safe.
You talk about a rules-based order, but China wants a multipolar world where there's more than just one power. Is there no room for that, given that China's on the rise and, the middle countries are doing a lot more as well?
I think middle countries are doing a lot more, but let's be clear, China's a great power. No one's denying that. America is obviously a great power, but China is a great power. And we clearly see that. And there is no problem with the rise of China. I mean, the economic growth of China has seen the alleviation of poverty for hundreds of millions of people. The economic rise of China has occurred in a way which has very much bettered Australia. We acknowledge all of that. But as a great power, there is a responsibility, an increased responsibility really, to be the guardian of that rules-based order which has enabled this economic growth, and that's what we look to.
And that was the Australian Deputy Prime Minister and Defence Minister Richard Marles speaking in Singapore with, of course, our Helena Amin. Right, we do have some breaking news. I believe we're getting to that first here on the Caixin numbers, which are coming in better than expected.
Oh, yeah. So we were expecting something to be maybe less...
Well, consistent with the PMI.
Yeah, less bad or less good. Or less bad, I should say, but not this good, right? So 51.7 is what came out from, this is the private gauge, mind you, so that beat expectations. You mentioned even the lowest estimate was around 51.
Yeah.
So it does paint quite a different picture to what you're seeing in the official numbers, which were sub 50 on Friday. Obviously there's always differences in these two sort of sets of data, but yeah, maybe could help these equity markets here today too. And there you go, strength in the currency coming through.
Yeah, markets reacting. There we go. Okay, plenty more ahead here on shows. This is the China Show. Right, welcome back. You're watching the China Show. A Chinese spacecraft has landed on the far side of the moon, boosting Beijing's efforts in its space race with the U.S. Bruce Einhorn, our Bloomberg reporter, is here with us to tell us about the story in this. Quite an achievement here.
It is indeed. So China is the only country that has ever managed to land on the far side of the moon. So this is the second spacecraft that the Chinese have sent to the far side. What's interesting about this one compared to the previous one, which was in 2019, is this is one that's a sample retrieval mission. What that means is that it's going there, it's going to collect stuff, rocks and dirt, and it will drill down beneath the surface and will then fly back to Earth. And so it will give scientists a chance to really examine things from the far side for the first time.
How does this all fit into China's overall space program and, of course, the space race that we're seeing with the rest of the world?
The reason they're doing this is part of a longer-term plan that they do want to send Chinese astronauts to the moon by the end of the decade. And so this mission is toward the southern part of the moon, near the lunar south pole, where it's believed that there may actually be ice, water ice, that potentially could be used to make oxygen, to make fuel that could be used for either flying back to Earth or flying on to Mars, or just to sustain human presence there. China wants to build a space station in that, a moon base, a research station in that area. It's also an area that the Americans are interested in, that India is interested in, that a lot of countries all are focusing on that area. So there is a bit of a race on to see who can get there first. The Americans want to be sending astronauts back to the moon for the first time since the end of the Apollo program in the early 1970s. The Americans are hoping to do that by 2026, but most likely that's a date that could very well slide. It will be interesting to see as the years progress which country is going to be able to get there first. I mean, not first, I should say. The Americans obviously were there first. Who could get there again?
All right.
First in our lifetimes.
There we go. All right, Bruce,
well, most of our lifetimes.
Most of our lifetimes. Bruce Einhorn, a moving report on the latest there when it comes to this very interesting moon landing from China here today. Another check of the markets. Yeah, it looks like we're going to the moon some ways when it comes to this HS Tech gauge here today. There you go. We're up some 3% and really bouncing back after we entered that technical correction on Friday. You've been taking a look at the technicals, and it really looks like that 200-day moving average is looking more like a support for them now.
Yeah, because we crashed below that following what was really a horrendous week last week that would put us into a correction, 10% down. And then right now we're seeing that bounce back, not just under 50 days, so we're probably at these levels back above that 200-day moving average. We'll see if we close above that at these levels. 3,800 right now is the Hang Seng Tech Index. Might have to do with the fact that, well, a couple of things might have been oversold. This, in some cases, might be this 10-cent story, of course, and the company denying that it was, of course, being asked to shrink its market share or lower, of course, some of its pricing around that. And also just the fact that inflation, and of course the core PC number on Friday is doing its bit to help risk assets, particularly when you look at some of these growth-related names. Hang Seng Index up 2.4%.
Yep, coming up the next hour, we'll be speaking with Belt and Road Capital Partners and risk analysis firm GeoQuant on geopolitics. Also talking to the Macao Government Tourism Office Director. Next. Welcome back to the China Show. Here's a look at the HSI just a half hour into the session, and there you go. It is driving this rally across the Asia-Pacific here this morning. We're up 2.5%. It comes off after 2 weeks of losses, really, for this equity benchmark, and really talking about consolidation. But today, at least we're seeing a little bit more of the bulls out here today.
Yeah, it's are we, or have we, I think, is perhaps the better way to phrase that. Have we entered this trend where we are seeing, of course, nothing goes up in a straight line, but are we seeing a trend where things are, you're looking at higher and higher lows and buyers coming in at sort of these levels? Initially, yes. The answer to it is yes. We'll see, of course, how long this lasts. Now, on the HS Tech Index, for example, this one actually entered a correction, which is 10% down from the peak. So going into this morning, we were looking at one specific level, which was your 50-day moving average. We bounced off that going into the close on Friday. We're now back above your 200-day, which we'll see whether that actually holds and whether Friday was simply an aberration in a sort of broader trend of strength moving higher in a specific index. We're up 120 points. Now, in terms of news flow as well, not just a technical bounce, you are getting a lot more push and points contribution from, of course, the biggest one here, which is Tencent. That stock last we checked was up 4 or 5%. There's also positive news flow as far as that stock is concerned today. So we'll continue to track this, of course, and how we end the day. It's early days, first 30 minutes of trade here. Asia ex China is how we're doing. So we're doing very well across some of the tech-heavy benchmarks here, like Korea, for example, up 1.8%. The TAIEX is up 1.6%. Of course, all these conversations on Computex. So you had Jensen Huang, of course, over the weekend. Lisa Du, I believe, should be speaking, if not already. Conversations there as well. Right, the two-year yield actually just bounced back a little bit higher in the last, I would say, 3 minutes or so. Although the direction of travel from Friday has really been a rally in the Treasury markets. Dollar-yen, okay, so we now know they intervened quite a big amount. Of course, I think it was about $9 billion or so US dollars. Do we get a repeat of that? And now that we might get an indication, of course, of when the Fed cuts, maybe one, just once, as the late, great James Ingram once hoped. Euro dollar We're looking at this because there's a key central bank decision, Yvonne, this week, of course, out of the ECB. They'll probably cut rates given all the signaling that they've done in recent years.
Yeah, I mean, June was what people were forecasting, so it might be happening this week. That really kind of leads our Eco Week ahead on what to expect, not just from the ECB. You mentioned about what we've been seeing in the U.S. and the data there. We also get some JOLTS jobs opening numbers, so more clues on what the labor market is doing as well. Some CPI numbers coming through in the region, like South Korea, the Philippines, some Aussie GDP numbers as well, and of course, to wrap up the week, the non-farm payroll. So a lot when it comes to the jobs market. Also, trade data out of China. Interestingly enough, exports are likely to rise about some 5%, but we certainly saw in those official PMI numbers that maybe this export-driven recovery is seeing a bit of a, I guess, vulnerable sort of position here, given some of these geopolitics.
Yeah, the new export orders, which are not arguably, which are the more forward-looking indicator than the number we'll get on Friday, although I think it's really the composition of where those exports are trading as well. Let's get a sense of what the week looks like. Certainly it's a day where if you're long these markets or risk assets, good on you so far. Mary Nicola is with us in Singapore, our MLive strategist. Mary, good morning and happy Monday morning to you. The bulls are out.
Good morning.
What's behind this bounce you were seeing today?
There is an element of it from PCE on Friday where you did see a cooling in numbers, so getting markets excited about, maybe that that inflation is starting to cool down, maybe that signals that cuts come sooner rather than later. But it's way too early to start and to get ahead of ourselves on it. It's only 1 month of data. The Fed is going to need a lot more to be really convinced. So that element of patience is going to really have to come through. I think what's key for this week is for a lot of the data to show that prices are cooling a lot faster than activity. We don't want to see the activity slowing and prices are resilient, because that could really hurt both the stock market rally and the bond rally.
Yeah, and we've been tracking, of course, this election in India, where certainly some of these ETFs are already flying here on optimism of another potential third term from the Prime Minister. Mary, does this sort of put the whole India sort of theme still alive for now?
For sure, because here we had for quite some time is that we saw a lot of outflows and there were a lot of market jitters surrounding the elections and what would be the outcome. So now you have a little bit more clarity, you have a little bit more certainty on the politics front. And of course, if you get a big majority from Modi, then he can push through a lot of the reforms that that will continue and to help economic expansion. And that's absolutely crucial for India, especially because we're seeing, really strong growth. And of course, that is showing that such a big divergence from China. And so if you continue to see that divergence between China and India, India is likely to win out.
Yeah, and Mary, just in the theme of geopolitical risk premium out there, and EMs, to your point, was a very big theme. India, Mexico, South Africa, all key elections, and we're literally getting more information and clarity on these things. Doesn't look like we're getting anything out of a surprise, or at least a range of probabilities that markets had expected. How do you think investors should be looking at geopolitical risk premium on the back of better EM, but it doesn't seem we're any better off as far as the U.S.-China conversation goes, following the Shangri-La Dialogue where you are?
Yeah, I think it's one of the key things is that we have seen EM trudging along and carrying along, irrespective of, seeing some of the lackluster data out of China. And that's large in part to do with what we've seen from the U.S. and that the U.S. has been quite strong and quite resilient. Even EM equities, they've held up quite substantially while China was underperforming. And that had a large part to do with the fact that they were more reliant and dependent on what was happening in the U.S. than in China. So that will obviously be a continued theme unless we see a really substantial turnaround in the economic recovery in China. But until then, I think there's still the geopolitical premium that's still going to come through, especially if, let's say, in South Africa, you get a very weak coalition. And then, of course, there are concerns about if the inability to foster reforms that especially is very much needed in a place like South Africa. And, of course, if you get any surprise out of India, you get the same results. But so far, it looks like, especially for India, it's moving in the direction that investors are looking for and what they would like.
Mary, fantastic stuff. Thank you for the insights this Monday. Mary Nicola, their MLife strategist. India's probably going to open at a record today, too. More on this Mexico story coming through as well. So the country might just get, or is set to have, its first female leader. Landslide victory is coming through as well. Based on these numbers, Claudia Sheinbaum is just expected to come through by a very large margin. That is according to these exit polls. It's literally coming through our Bloomberg screens right now.
All right. Well, coming up, we're going to do a deep dive into U.S.-China tensions after the Shangri-La Defense Summit lays bare some deep divisions on security strategy. We're going to get analysis with Belt and Road Capital Partners and risk analysis firm GeoQuant next.
Safeguarding security and prosperity of this region remains the core organizing principle of U.S. national security policy. The United States can be secure only if Asia is secure. And that's why the United States has long maintained our presence in this region. And that's why we continue to make investments necessary to meet our commitments to our allies and partners.
We will not allow anyone to bring geopolitical conflicts or any war, whether hot or cold, to our region. We will not allow any country or any force to create conflict and chaos in our region.
And you just heard from the defense chiefs there from the U.S. and China speaking at the Shangri-La Dialogue in Singapore, of course, over the weekend. Let's dissect what we know based on the conversations that took place. Are we in a better position right now moving forward? Joining us now is Digby Wren, geopolitical risk and analyst and policy advisor at advisory firm Belt and Road Capital Partners. He joins us out of Beijing. And, of course, also joining us today is Schaap, head of research at GeoQuant, which provides high-frequency predictions on geopolitical and country risks using AI-driven models. Gents, thank you so much for joining us. Lots to unpack. Digby, let me start with you. Busy weekend as we try and unpack and the key takeaways there. What stood out to you the most, sir?
Well, I think the first takeaway, of course, is the completely differing perspectives. China's perspective is also, much closer to the impact, if you like. It's on its periphery, whereas the American impact, of course, is from long distance. The perspective is further away, and I think that from Beijing always makes the American view difficult to take. And I think that Beijing sees that the Americans are creating instability, whereas the Chinese believe they're creating stability, and that's the basic differences.
Okay, maybe Digby, follow up on that then. Do you think that the fact that these defense ministers are meeting from both sides, I mean, there's been so much scrutiny about why we're not getting, these defense talks underway, and now we're finally seeing a little bit of that conversation at least. Does that put us more in terms of a more, I guess, stabilizing relations between the U.S. and China?
Definitely, in relation to the military to military communications, that's been going now for at least a few months, and that's a really good step forward. However, all the the essential problems exist. But yes, you're right. Communications is always going to be dialogue, and that's exactly what the Chinese have always been asking for, and what they continue to ask for. And I think that's their primary concern, is to ensure dialogue and not actions. So U.S. actions, unilateral, say seen as unilateral. And then some kind of dialogue after the provocation has been made. So this is always essentially still going to rub China the wrong way.
Yeah.
Roz, let me bring you in, but before we ask you, before you could lay out, of course, some of the findings of some of your models, and certainly when we were looking at some of your notes here, it's quite something that you have. If you could just lay out for us how your models work and how you use technology to just try and extrapolate what really are very difficult outcomes to map out.
Yeah. Well, at GeoQuant, we've developed a natural language processing machine learning model that basically tracks the news and scores it for a range of political or country risk concerns, right? And so on the basis of that data, we build models around discrete sorts of negative events. So China-Taiwan conflict is an event that we track, Russia-Ukraine, Israel, Iran, et cetera. And we're building additional models, scenario analysis models that track and sort of create and generate up-to-date data day by day to track those events and how sort of hot they are or soft, how quiet they go.
Right. And Ross, just to follow up on that as well, because you mentioned large language models, and sorry to get a bit techy here, but how do you drown out the noise, particularly when you get a very hot geopolitical story? You get a lot of bots and commentators coming through, and I'm just wondering how you just sift through that and just get us really to what matters.
Well, our model reads the news, right? Reads thousands of articles every day and aggregates this over time. So yeah, there is a lot of noise, and even noise after aggregating through the variety of models that we run through. But that does soften, sort of like creating a moving average of the news in a sense.
Okay. Can you tell us, we have a chart that shows a little bit more of your analysis of the overall political risk, Ross, that we're seeing around the world. It's interesting enough, as we talk about these rising tensions between the U.S. and China, you're actually seeing geopolitical risk rising in the U.S., but actually dropping in parts like China, the Philippines as well. It's interesting when you talk about the South China Sea, too. What do you think is really driving that right now?
Well, for the U.S., right, the U.S. does sort of put its fingers in lots of different events around the world and constantly is pushing its position, especially on sort of non-economic events, diplomatic security concerns. And so that generates more risk for the U.S. than it does for China. And I think China has, in recent months, certainly so far this year and a little bit sort of last year, taken a number of steps on trade to sort of soften its trade relationship with Australia and others, and those sort of go hand in hand with, I think, an improving or decrease in risk on diplomatic concerns with a variety of bilateral partners.
Yeah, Digby, I'll bring you in on that note that Ross the broader note I should underscore that Ross just outlined, that China's trying to mitigate its political risk by reaching out to other places in the world. I know you've done some work on China's efforts to bring the Middle East and increase its footprint there. Tell us about what you're seeing there, Digby.
Well, what I'm seeing in the Middle East and West Asia and the Eastern Mediterranean is problems. The last thing in the Belt and Road needs to complete the Afro-Eurasian connection is the roads through Iraq and Syria to Israel, to the Red Sea, the mouth of the Red Sea. And this is where you see the conflict. But the BRICS Plus, I think, is now stabilizing that whole Red Sea area. And I was just I just did a keynote speech in Beijing a couple of days ago where I had ambassadors from all of those regions, Somalia and Eritrea, Saudi, so forth. And look, they're seeing a stabilizing factor in the BRICS Plus, and I think China is having a large effect there. Russia is also active in the area. The Turks are active in the area, and I think they all want to stabilize that. They don't want to see these problems in the Ukraine, in Gaza, in Taiwan. They don't want to see that going, crazy into Africa and across the Red Sea. And that's basically a stabilizing factor. And I think Iran and Saudi Arabia and Egypt and Ethiopia, who had conflict before, and they're now settling those water problems. Look, that's actually a positive outlook on the Red Sea in general, but of course the Gaza-Israel situation is still going to be very difficult.
And what does this mean for the South China Sea, also when it comes to Taiwan, the Taiwan Strait? I want to throw some sound first. We heard from the Defence Minister in China, Dong Zhen, talking a little bit more about the situation in Taiwan. Let's listen to him on that first.
The Chinese People's Liberation Army will remain a strong force for upholding national reunification. We will take resolute actions to curb Taiwan independence and make sure such a plot never succeeds. Anyone who dares to separate Taiwan from China will only end up in self-destruction.
It's similar rhetoric we've heard before, Digby, but certainly, it does raise the question. After less than 2 weeks ago, we saw these large-scale military exercises around the Taiwan Strait from China. Are we closer to some sort of conflict in the Taiwan Strait, or should we be looking elsewhere, like the South China Sea, more?
No, I don't think we're looking at conflict. I think that's just using the word conflict is kind of changing the context too far towards the red lines. No, I mean, these are just really consistent positions in real terms, and they're being stated slightly more vociferously, with more strength, but the essential situation is exactly the same. Now, in terms of the naval movements around and the air movements of China around Taiwan, I mean, they're just demonstrating capability. That's the key part here. But the actual position is not the same. And as we said at the beginning, at the top end of the show, the dialogue between the military, both militaries, and especially in a context of the American-US election. So there's some manipulation of public opinion going on here. Conflict is not the right way to look at this. It's definitely a continuation and a heightening of this because it feeds public opinion, especially in election cycles. But the reality is that China's capabilities are growing and America's capabilities are not growing.
Roz, let's put some numbers behind that. I know you guys have done some work, quantitative work on this as well, and we're going to flash on our screens for our viewers and for you guys too. At least what the base case looks like, but you know what's worrying me, Roz, is that widening out of the outcomes, either side of, I guess, status quo, if that's a good way to put that, that doesn't make me sleep well at night, Roz.
Yeah, well, the trend line there, right, is the average trend really over the last dozen years or so. And right now we're basically at trend. So risk is relatively low and it's actually forecast to fall a little further. You see the confidence interval in that forecast, right? And obviously these are very difficult confidence intervals to sort of generate. And so they grow very large very quickly beyond a sort of 3 to 6 month forecast. And that's why you see that height there. But you don't see any sort of risk even in that confidence interval that looks like it would rise to the level at which we would see a actual conflict, right? It's maybe at the end of the confidence interval we're maybe 4 standard deviations off of trend, and I'm sorry to talk math, but that's well below where we would think a conflict might get hit in our data.
Yeah, well, 4 standard deviations, that's black swan territory, isn't it? But let's make it simple then. You mentioned 3 to 6 months. How much visibility do you have on 3 to 6 months? Do things get better, is the simple question.
I think that, things, actually it's sort of weird because everyone's, looking at this and they're looking at and seeing heightened risk. But since the election in Taiwan earlier this year, we've actually seen a reduction in risk in our model. And we think that's really in some part because the new Taiwanese president is actually going to be constrained, will not have the legislative majority that the prior president had. And that has obviously created a lot of hoopla and some noise in Taipei after, along with the inauguration, as the opposition parties try to sort of generate a variety of new rules that will help them monitor and sort of sanction the president or the executive offices. At the same time, that's probably good, right? It's a constraint on President Lai, and that constraint is probably going to generate greater stability, greater policy stability in particular, and that's probably good for overall sort of stability in the region and across the strait.
Digby, just to bring you back in, but let's shift the topic to Ukraine. And President Zelensky was in Singapore. He made that appearance there. I think he tried to gather in support from the region for the conference they have in Switzerland, I believe, mid of June, that might be able to lay out for us a path towards an end to this war. It doesn't seem China's going to be attending that as well. How big of a challenge does that become then in achieving an end, at least a map towards an end to the war in Ukraine, Digby?
Yeah, look, China's policy, in relation to the peace talks, the Swiss peace talks, look, China has open channels to Switzerland, evidently, and look, they're not going to attend because it doesn't include Russia and Ukraine. That's very, very simple. Those parties have to be there, and they have to be included, and until that happens, there's not going to be any peace talks. But China definitely wants it to happen, and they've released a 6-point statement with the Brazilians. But, this is basically, and that statement was about non-escalation, so on the battlefield, supply of weapons, etc. And I think that position seems, and my friend at Quant Analysis, I think will agree with this, is until that happens, risk is going to remain higher. But look, I think China's trying to mediate, and they've definitely got a much stronger position for mediation than the US or the EU, the NATO countries, who have a stake in the war, in fact. So, China's position, I think, is a more balanced one, and I think the global South, generally global majority authority is also going to follow that, and that's an important part that that they understand now, in a real sense, that the US has a kind of a real, they're sitting on the fence, so they're trying to face one way and then face the other way, but at the end of the day, China's stake is much, much lower, and they're going to be able to be more helpful in mediation eventually.
Digby, thank you so much for joining us. Also, our thanks to Ross, Digby Wren, their geopolitical risk analyst and policy advisor at Belt and Road Capital Partners, and Ross Schaap, head of research at GeoQuant. We got plenty more ahead. This is Bloomberg. All right, we're taking a look at market right now. Markets and chip stocks in particular. Overall, the tech space is doing quite well. But yes, look at Taiwan Semi. We're at close to $850 here right now. And certainly, there's a lot of optimism what's been going on in Computex in Taipei. AMD's Lisa Su just finished her speech as well. So certainly that's what's lifting the semiconductor stocks here today. We got plenty more ahead. This is Bloomberg. Our 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break here in just a minute, and we are seeing a pretty good day when it comes to Japanese stocks. We're up close to 1% for the Nikkei 225. Yen, we're still seeing some strength, but we're back to those 157 levels as well. Keep in mind, we also did get confirmation that, in fact, we did hear that Japan intervened to the currency last month, about 9 trillion yen or so, which was quite a sizable amount here. Yields are not doing a whole lot. We're still hovering around that 1% level here, Dave.
Yeah, so a lot of things to the point on just yields right there, right? So there's still the element of Asia readjusting back to maybe a low inflation outlook, not current environment outlook, with the PC numbers coming through. So lower yields, we're looking at this really, really strong rally. And we just showed you TSMC and Samsung a couple of minutes ago, about 3% on that. We might also get India opening at a record high today. On the back of more favorable news there. So, a lot of the confluence of factors as you look at Asia ex-Japan right now coming together and really pushing this market even forward. So first row, leftmost side, MSCI Asia Pacific Info Tech Index, 2.3% to the upside. Every single sector just about is higher as well. Financials, industrials, even utilities, which tend to act as a defensive play, are also catching a decent bid. Asian currencies are seeing a bid as well. Big week as far as economic data is concerned, economic events. Certainly the ECB should be the top of the agenda this week here. That Thursday comes out, of course, the first rate cut. Might that, of course, be leading us into this rate cutting cycle? Speaking of tech, in Taiwan, at Computex, in case you don't know who that is, of course, that is Lisa Su, the AMD CEO. She is set to speak. I think they're just setting her up right now. And are we listening in? I guess we are.
And we are excited.
Okay, well, obviously we're hearing a lot of optimism. Everyone wants to watch, after what we heard from Jensen Huang, unveiling this sort of new set of chips and the like, or the Rubin as they call it, this next generation, that what is AMD going to present in this presentation as well. They are still the one that, is the one to watch that potentially could catch up to this whole Nvidia sort of trade, right?
Yeah, the moat around Nvidia and how far they are quarters away. The fact that, aren't they related?
Yeah, they're cousins.
They're cousins, right? Oh my goodness. And I was just with my cousin over the weekend. Talk about the difference in the levels we operate at.
Oh.
In any case.
Thank you so much.
There we go. Okay, we'll get to this. We'll revisit this in a moment here out of Taiwan. Any more news lines coming through as well. Let's pivot back to this part, at least, closer to Hong Kong, Macao casinos, right? So you had a big jump in revenue, nearly 30% in May. That's year on year. So we're now, in fact, at the highest level here since COVID. Gross gaming revenue, so that's the intake of these casinos, $2.5 billion, that's US dollars for the month. You had a lot of these multiple entry permits in China boosting, of course, the flow of tourists, and of course, tourism, of course. I think we have sort of take a step back piece on this. Chinese tourists are to spend nearly $1 trillion on holidays at home as well. Yeah, so what's, I guess, Let's talk about Macau.
Yeah,
even
I mean,
further.
certainly you're seeing these casino operators are rallying on the back of this data as well. For more on what's been going on in Macau's tourism push, joining us exclusively now is Maria Helena de Fernandes, director at the Macau Government Tourism Office. Helena, thank you so much for joining us. It's a pleasure to have you on the program. Yeah, the numbers are looking good, but you take a look at how visitation has been in Macau. That has actually slowed this year. We're talking about falling to about 76% of COVID 2019 levels. What do you think are the reasons behind that? And what do you think casino operators need to do more to boost tourism?
Well, I guess, in terms of numbers, well, we're seeing that probably in May, figures have a little bit slowed down a bit. But in fact, we're still on target to hit probably 33 million by the end of this year. Last year was 28 million, so obviously it's not yet up to 2019 levels, but at least, things are going in the right direction. And in terms of expenditure, we're seeing that besides, obviously you've talked about, gaming receipts, hitting very, very good results. But at the same time, non-gaming spending is also going up. So we're seeing, I would say that, besides gaming, which people talk a lot about in terms of Macau, we're also, going in the right direction in terms of non-gaming activities as well as expenses. So we are on track in terms of our diversification strategy, and hopefully, going forward, we will not just talk about Macau in terms of gaming, but also non-gaming.
Yeah, Helena, to your point, I think you bring up a very important and salient trend that we're starting to see, not just in Macau, we're seeing that in Hong Kong, we're seeing in many places where tourists, anecdotally, but many examples of this, are starting to spend more on experiences than big ticket items. And I'm wondering, is that something you're seeing more pronouncedly in Macau? What are people spending on, if that is the case as well? And do you see that continuing?
Well, interestingly, in the surveys, coming up, during the last year and now, we're seeing that a lot of the money goes in terms of shopping. I guess about half of the non-gaming expenses actually go into shopping, and then the second would be in terms of accommodation, and then third, food and beverage. So these are really the items that people are spending on. Obviously, there are a lot more things to do now in Macau. After the new gaming licenses were issued, they were, all the 6 operators are charged with the with the responsibility to actually invest heavily in terms of non-gaming activities. You're seeing a lot more of performances, a lot more on cultural activities, and a lot of sports activities actually happening in Macau. And obviously, we are investing very, very heavily in terms of attracting international visitors. We are seeing gradually more flights coming in. I've just been in Korea last week, and obviously in July we will see an additional carrier, Korean Air, flying to Macau. Air Macau itself is also adding international flights as well. So I guess there's there are a lot more opportunities going forwards, but we have to work hard, obviously, to get the visitors. It's not like before. You can just put up an advertisement and then people start thinking about your destination. They will come. Right now, people are actually looking more in terms of content. We have to tell more about the destination. We have to give them reasons to come to your destination. And so there's a lot more work to do now.
Yeah, you mentioned more work to do. I'm just wondering, a lot of the sort of non-gaming offerings have been done by the 6 casino operators. What exactly is the government doing? Because a lot of it has these big projects are done by gaming licenses, not so much the government. So beyond just airport capacity, what more are you working on now?
Well, I think, the government is also investing in a lot of different activities. It's not that, the 6 license holders are doing more activities. It's really because of the government actually, obliging them to do a lot more activities as well. As you would know that, under the new gaming licenses, which were, which started last year, all the 6 gaming operators are required to actually invest and they have a commitment to the government in order to invest in non-gaming activities in order to get their gaming licenses. So a lot, all these activities also have to be approved by the government every year. So I guess there is a lot of say in terms of the government as well. The government also launched a diversification strategy as of November last year, which requires that going forwards we are engaging in what we call the 1+4 strategy. One, which means integrated tourism. Obviously, gaming plus tourism activities, and then we have 4 additional areas which the government would like to see developments going into. Obviously, we're talking about modern finance. We're talking about technology, we're talking about wellness. We're also talking about a very big area, which is actually meetings and conventions, plus sports and culture. So there is a lot of direction that the government is giving out, to steer the destination towards a more diversified portfolio going forwards. Obviously, we are also doing our own activities. We are utilizing our strengths. One, as obviously our historic center of Macau is UNESCO World Heritage. On the other side, we are also investing heavily in terms of food activities because we are also a UNESCO Creative City of Gastronomy. So going forwards, we will definitely use more of these strengths of Macau, and with the recent visit of a high-level government official from China, we are also, we've also a new responsibility to actually bring Macau forwards as a international metropolis, which we call the new golden calling card of Macau.
Yeah, Helena, I was joking with some of my friends. I would give up some members of my family for one of your fantastic and delicious pork chop buns. That's banter aside. Banter aside, I want to understand where the tourists are coming from. So we know mainland China is a very big feeding market. We know Guangdong,
yes,
the province itself is, I think, about a third of your visitor numbers. Where else are you seeing the sources of flow starting to pick up? And also, where are things starting to soften? Because you are also having to deal with regional competition. Philippines, for example. I think Thailand and Japan are coming up with their own integrated resorts at some point.
Well, I guess it's not just competing on the gaming markets, but it's also competing on leisure as well as meetings and conventions altogether. So it is a very competitive environment out there. I think at this point in time, we're seeing that the international visitation is coming up gradually. Our target for this year would be 2 million visitors from international markets, which means, taking out mainland China, Hong Kong, and Taiwan. And so we are on track right now. I think we should hit more than 2 million this year, and we are hopeful that by next year, end of next year, we should be back to the 3 million mark. Which means, probably, to 2019 levels. We are seeing a softening of the big group markets, which last year, I should say, 2019, before the pandemic, we have more or less like 8 million people who declared that they come in excursion groups, big, tour groups. But last year, the number is only about 1.2 million, which means, the market is changing into smaller groups, demanding more, I would say, personalized services, as well as, more, I would say, immersive experiences or family experiences. So the market has also, the trade also has to re-engage themselves or really do a little bit more in terms of these kinds of new markets. And we are seeing that, gradually people are realizing that. And then obviously the product itself is also more nowadays geared towards the smaller family and also family and friends, kind of experiences.
And we've also seen China easing some of these travel permits to Macau. One example is Hengqin, right? Anyone that attends a tour or conference or exhibition in Hengqin Island, they're allowed to enter Macau multiple times. Can you tell us more about the opportunities when it comes to this island? And what of some of the casino operators, what sort of feedback have they given you so far?
Well, I guess Hengqin Hengqin as of 2021 is a new development area, which is, I would say, administered together between Macau and also Guangdong. So it is a completely new arrangement between ourselves and, our friends across the border. And it's a very, very special area, which the entire strategy is really to support the diversification strategy of Macau as well. So we're working very closely with Hengqin, and with the new policy which has come into place just recently, obviously tour groups are able, when we're talking about tour groups, if they're as little as 2 persons, they can actually come multiple times, between Macau and Hengqin within 7 days of their stay. And so this also opens up opportunities in terms of activities that we can do together with Hengqin, or we can also tap into the hotel market in Hengqin as well. We have around 48,000 rooms licensed in Macau right now, which is also better than 2019. At that, 2019 we had only about 41,000 rooms. So we do have new room inventory, but at the same time we see that there is possibility that to also utilize the rooms around. I think they have around 10,000 rooms across the border in Hengqin, and we can also utilize their other activities. Say, for example, the Chime Long Resort, because the problem with Macau right now is that we don't have enough land. We cannot host a very big theme park. So we can also utilize the theme parks and also other theme activities across the border in Hengqin to better extent. Because previously you can only come once into Macau, so it's very difficult to actually fit everything into your one stay. So with multiple possibilities, now we can actually plan our itineraries better, and we can also utilize for MICE groups. You can actually plan how you can spread your group of people between Macau and Hengqin, and also utilize better the resources on both sides. So I guess it actually would work to the benefit of both sides. This year, we're also seeing that mainland China has also opened 10 new cities for individual travel into Macau and Hong Kong. So now we are actually trying to utilize more of these possibilities. Not all of them have direct flights into Macau, but I guess even working together with the Greater Bay Area, especially Hong Kong, especially Guangzhou Airport as well as Zhuhai Airport, I guess there are a lot of possibilities to strike multi-destination tours.
Great, Helena, we're going to leave it there. Thank you so much, Maria Helena de Senna Fernandes, their director at the Macau Government Tourism Office. We got plenty more ahead. This is Bloomberg.
China has a whole economic model that is not sustainable. Vastly inadequate domestic spending, vastly inadequate consumer demand, has run out of sufficient investment opportunities to keep the economy rolling. It still seems inclined to try to export its way out, which is not going to happen. The world is not going to accept it.
There you go. That was, in case you didn't know, that was Paul Krugman, City University of New York professor of economics, of course, joining us a little bit earlier here on our shows. Also joined us earlier on was Tsinghua University director and former PBOC advisor David Li Daokui, talking about how consumers in China are reluctant to spend, and that could actually be underscoring some challenges for Beijing. Now, he spoke with us about these issues he's seeing, of course, in this part of the Chinese economy.
The situation in China is that there's tremendous amount of liquidity. People are very cautious. They hold on to their cash. They hold on to their bank deposits. They do not want to spend as much as they usually do. And investors are also doing the same. So the huge amount of liquidities are trapped in the banking sector. What the central government should do is to issue lots of central government debt. By the way, the central government only has about 20% of GDP in the amount of the central government debt. Much more than doubling the size can work for the whole economy. Because local governments are holding on to loss of debt, which amounts to 100% of GDP by my calculation. So what is going on is like this. Households are willing to buy central government debt, and households are not willing to buy directly local government debt. There should be a swap.
The PBOC finds itself really, as the key player in what it can do to try and boost sentiment. It's got a lot of powerful tools in its kit. Can any of them really serve to revive broader household confidence for the property sector?
Well, there are two things Chinese authorities can do, which they're doing, but I would argue they're doing too slow. Number one is to provide more liquidity to the largest developers of the property market, to actually make sure that they are not further defaulting on any debt. The other thing is to issue much more central government debt to swap out local government debt. Currently, local governments are heavily burdened in their debt, and don't forget, local governments are one of the biggest investors, biggest buyers of goods in the economy. The government has issued recently 1 trillion RMB in the amount of they call extra long central government debt. What they should do to more than double, they should have 10 trillion or even 20 trillion, that amount of extra long bond. Actually, the market response to 1 trillion extra long maturity bond of the central government has been extremely enthusiastic. So I do believe that in the coming month there will be a lot of more policies to come out. People are holding their breath to wait for the policy announcements in July, when the third plenary of the Central Committee of the CCP will be held.
For the property sector, it's interesting. Would you say that it's more important, more critical for you to be shoring up confidence for the developers as opposed to chipping away at excess inventory, which we've seen the PBOC unleash this 300 billion yuan when it comes to credit for banks to be able to fund some of these local government property purchases?
Well, I would argue that the 300 billion RMB going to local governments for them to buy the inventory is good, but not enough. Okay, I would argue that the actually more important thing is to float the developers, because when the developers, actually the headquarters of developers are not in good shape, they may further default on their debt, whether domestic or international. When they default their debt, there will be tremendous shocks in the financial markets.
And that was the former PBOC advisor David Lee Daokui there speaking to the Asia trade a little earlier on. We got plenty more ahead. Get you another market check after this break. This is Bloomberg. All right, taking some movers here. We're taking a look at the developers here this morning. It looks like they're doing decently well. The fact that long for is up some 3%. So we did get some data over the weekend where home sales, basically the slump that we've been seeing for some time now, looks to be easing. So maybe there's signs that this government support is finally making it through to these numbers as well. And certainly we are also talking about, there's a lot of big lines in some of these property brokerages or people really looking for homes now in these first-tier cities.
We're getting some pictures out of Securities Times and really talking about how, I think anecdotally, outside many of these Fangdichan Zhongjie, which is like the real estate property agents here, you're getting a lot of people, of course, bustling, and interest is picking up. I like this line out of Citi on the back of the story that May sales actually saw a slight pickup in the recent 2 weeks despite having fewer launches. So you are getting incrementally better information coming through in the property story here.
Okay, well, that certainly is helping. Here's what markets are doing here right now. So we continue to track this tech rally that's going on across Asia. Tencent certainly is leading that charge. Well, we'll see about 4% gains there. They denied this report about being asked to lower their WeChat payment market share. That certainly did help the stock here. But take a look at some of these EV stocks like NIO, Li Auto coming up with these delivery numbers, which look pretty good as well. BYD up some 6%. We're watching India futures in the back of that election. Official counting could be ending on Tuesday, but certainly looks like a third term for Modi.